What's up, ladies and gentlemen? How is everybody doing on this fantastic Saturday morning? So basically, we're going to take a look at Bitcoin, and also this video is going to be a little bit different than my usual Saturday format. Hopefully that is okay with you guys. First, we're going to analyze Bitcoin as it's in a range, so there's not a whole lot to do, and then we're going to talk about a possible strategy that you can use in the future if this does indeed become the bear market phase. All right. So that will be at the end of the video. So make sure you stick around for that. First and foremost, Bitcoin is trading in a weekly range. Okay, let's go out to the weekly and let me show you what I'm talking about here. So you're trading inside of this massive weekly range. This can take several weeks for price to get outside of this week. All right. So I don't know if it's going to be to the downside or the upside. Nobody knows, but it could take some serious time before you get out of this area. So if you're taking trades inside of this range, just understand that they're not high probable setups. So we use the daily range for now because it's a little bit smaller and there's a good chance that you're going to take out the high or the low of the daily range before you end up doing it on the weekly range. But if you do take out the low of this daily range, then obviously you've taken out the low of the weekly range as well. So first and foremost, this is daily support at $49,241.12. You can see that price traded away from that area, treating that area as support until boom, this day happened right there. This day had a nice down day, closing below support. Then you had bearish continuation. You traded up into this day's range and then you fell, trading down, closing red on the day, and putting in a new low. So far today, we've opened, we've taken out this low, and now we are moving to the upside. However, you've got to get a daily close above 49,241 spot 12. Otherwise, the target will be today's low. A daily closure above 49,241 spot 12, then my bullish target will be this day's high. All right. I don't know that it happens in one day. I'm just saying that's basically how I'm going to approach these markets for this week to come. I'm going to be trading inside of these daily ranges using what support and resistance levels we currently have. And as of right now, the trade looks like it's a potential short back down to the low of day, unless you get a daily closure above that. Then we'll be looking for this high up here to be taken. Just understand that if you're inside the hourly chart and you're trying to take entries based off of hourly support levels, there's a pretty good chance that you're probably going to be stopped out. It's professional grade trading when Bitcoin is doing this. Price is being compressed and it's just taking out highs and lows. All right, that's what it's doing. That's what price discovery is. Let me explain to you what I'm referring to real briefly. All right, so since we put in the capitulation wick to the downside, we set in a low. And then Bitcoin traded up to this high. This high on this hourly is the highest hourly until Bitcoin traded lower and then set in this low. So this low is still currently intact, right? But what low did Bitcoin take out? It took out this low here. Price traded up, set in a high, set in a low, traded sideways, and then boom, took out this swing low. Then price proceeds to move higher, taking out that swing high. So now we have a new swing high. That is potentially the target. That is that daily high that I spoke about briefly just a second ago. So then it comes in, trades crazy sideways, and then attacks this low there. Boom. So now that low is vacated. So this is our new low, but wait, no, boom, there, got taken out again. So if price rejects at this hourly Heath level, also daily resistance, if this continues to hold price, then this is going to be the target for now. All right. If you get a daily close above daily resistance, then ultimately in the next day or so, I would be looking for a target of 51,995. Beware, guys, professional traders only in environments like this. All right. And that's pretty much all we got for Bitcoin. Until it gets out of that weekly range or that daily range, it's pretty much going to be choppy like this. All right. And you're going to have to have smaller price targets and make sure you're only taking entries at the outer edges of the range. All right, so now moving on to the BLX index, where we can discuss potential buying opportunities if you are looking to hodl. All right, so I'm going to go ahead out to the 2-week chart. I've already got this drawn in. Basically, what I've done is I've taken this tool here, the date and price range. You can find it here, right there. And then the purple vertical lines are your halvings. Okay, these are the halvings that we've already had. I'm essentially just taking that date and price range from the halving to cycle peak. That gives you a midpoint. Let's get rid of this green line so I can show you what I'm talking about. That gives you a midpoint. This line here, that's your midpoint. So by hitting Alt H for the horizontal line and then lining it up with that midpoint, that gives you a decent area to look for buying opportunities. Now, in the first halving, the bear market low did not come in contact with that midpoint. All right, so this only happened in the last cycle, last market cycle we had. So same thing, here's the halving. From the halving to cycle peak, midpoint, you can see that that was an opportunistic buying opportunity back in December 2018, right? And then again in March 2020, you could have picked up some more Bitcoin there for the new market, for the new bullish phase heading into the last halving that we just had. And you can see we repeated the same exact process that we have repeated on the previous two cycles. Okay, so basically, if we are going to look at this high being the cycle peak for this market phase before the next halving, which is over here, then same thing from there to there, that gives us a midpoint of 24K. Now, this is important. I did have a dollar cost averaging strategy that I was implementing, buying red weekly closes. So every time Bitcoin has a red weekly close, I add a little bit more Bitcoin to my HODL position. I'm going to do something different because I've been doing more and more research on this topic, and it's to use the fear and greed index. All right, so one of the guys in the Discord, Jeremiah Jones in the Discord, showed me this link that he found on Reddit where this guy's already done all of the data. You can take a look at this if you like. I will drop the link of this inside of the description box if anybody wants to take a look at this and do their own analysis and research on it. But it's a fantastic read. I suggest you really take a good look at it. So here is the crypto fear and greed meter. Basically anything under a 20 read is extreme fear. So basically going back to the BLX index, what I'm going to do moving forward, I'm going to do this with a new account, and I'm going to keep statistical data moving forward for the next 5 years to see if this strategy ends up being a good strategy or not. I'm going to open up a new account with a small amount of Bitcoin and just see what happens. Here is how I'm going to implement the strategy. If and when Bitcoin gets down to 24K, I am going to buy there with a lump sum of cash. All right, just to go ahead and get the position started. Then every time, if Bitcoin trades below 24K, I am only going to be looking to be a buyer of Bitcoin when the fear and greed index gets below 20. Anything below 20. And I will probably be watching it on weekly ranges. Okay, so this means that Bitcoin can close a red week, but as long as the fear and greed meter isn't below 20, I'm not going to be a buyer. So in summary, I'm only going to look to be a buyer of Bitcoin below 24K once that initial entry of 24K, and I'm only going to buy it when we get read lower than 20 on the fear and greed index. And if it, however many times it happens, all the way up until March 25th, 2024, which is the estimated new halving period, I'm going to continue to do that until then. Once we get into this area, then I'm no longer going to be dollar cost averaging down, because by that time, hopefully I have a really good cost basis below the green line, getting ready for the next bull market phase coming 2024. If you guys liked the video, please make sure you hit that like button. Also, subscribe to the channel. Let's see if we can't get this channel up to 10,000 subscribers by the first of the year. That would be fantastic. It's a lofty goal, but I think we can do it. So thank you guys so much for being here. Make sure you trade safe, trade smart, and as always, happy trading, guys.